we're seeing a permanent erosion of trust. People don't respect and don't trust the mainstream media anymore. In politics, where we're seeing trust crumbling, it is starting to crumble at the moment, and this is the perfect case for gold going forward.
Friendly reminder, please do join us for another live stream this coming July 7th at 9 p.m. Eastern Standard Time. We'll go over the top news of the day, key points from past guests, and of course, gold and silver. Once again, please do join us for another live stream this Sunday, July 7th at 9 p.m. Eastern. I'll see you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you're new or have not already done so, please do subscribe to our channel, click on the bell to be updated on new content, and do give us a thumbs up if you like what we do. Today's guest, Ronald Stoeferle, a managing partner of Incrementum AG, an independent investment and asset management company based in Liechtenstein. A proponent of Austrian economics, Ronald co-authors the well-known In Gold We Trust report with Mark Wallach, which has become one of the benchmark publications on gold, money, and inflation. And we are delighted to have Ronald here today as a return guest. Good day, Ronald, and welcome back to SBTV. How are you doing?
Good afternoon or good morning. All good. I hope you're well.
Doing fine, and I hope you're doing well yourself. Ronald, the IGWT in Gold We Trust Report 2019, movements in the gold price in recent weeks have been very encouraging. It broke the multi-year resistance of 1350. Finally, it even went up to 1400 confidently. Are we finally seeing the signs of the next gold bull market?
Short answer is yes. I think that we have already seen quite a lot of signs that gold is preparing a new bull market in gold. Because actually, I always wonder why people only follow the dollar price of gold. We could see and observe that gold was already doing pretty well in many emerging markets, currencies, but also in Canadian dollar or Australian dollar terms, gold was trading at new all-time highs. In euro terms, gold was doing very, very well. And even in Swiss franc terms, which is a safe haven currency, gold did well. So the only currency where gold was not yet really in the bull market was the US dollar, and actually timing of our last In Gold We Trust report couldn't have been better, because we exactly described once we're above that technical Rubicon at 1350 to 1370, which has been a really tough nut for gold to crack. Once we're above that, we see explosive momentum kicking in, because there are so many market participants waiting on the sidelines, waiting for this resistance line to be cracked. And yeah, exactly, this happened. And I think now this is really, we have seen some fear of missing out the last couple of days. So every pullback was bought, and it seems that gold is really now reappearing on the watch lists and the radar screens of many institutional investors, of many generalists. And this is something that we haven't seen in ages. So from my point of view, we are back in a bull market. We're at the very beginning of this bull market. We have seen this acceleration stage, this accumulation stage of the trend according to the Dow theory in the last 3 to 4 years. Now we are at the very beginning of the public participation phase, which is the longest phase of every trend, and of course the most fun part of the trend. And it always ends in the acceleration stage, the distribution stage, but we're still far, far away from that.
Okay, yeah, the 2019 In Gold We Trust report is titled "Gold in the Age of Eroding Trust." The introduction of the report went on to expound on the importance of trust in our daily lives. But question, why did the editorial team for the report decide to choose the topic of trust as a key point for this year's report? And what is the context when you say eroding trust?
Well, the thing is, when I came up with the title 13 years ago, In Gold We Trust, I actually thought, okay, that sounds great, and it makes good sense, but I didn't know too much about the topic of trust back then, and how asymmetrical the matter of trust is. So it takes years, sometimes decades, or even centuries to establish and to foster trust. And then it can only take a couple of moments, seconds, to completely destroy this trust.
Yeah.
And when it comes to trust in our daily lives, it's extremely important. It's the basis of all human interactions, of business, of every relationship. I mean, when you're jumping on a plane, you have to trust the pilot. You have to trust the airline company. When you're going to a restaurant, you have to trust the chef. When you're doing business, you have to trust your business partners. You have to trust your clients. So not only in our personal relationships, but also, of course, in business, when it comes to institutions, and also when it comes to money, trust is essential. And it seemed, and this might sound like a bit of a philosophical start of the report, but it is something that is really important for us. It seems that we're seeing a permanent erosion of trust in many areas of our lives these days. You know, for example, the media. People don't respect and don't trust the mainstream media anymore. If you have a look at the the numbers of alternative media outlets, if you have a look at the numbers for the well-established old, basically state-owned TV stations and so on, trust in them is just crumbling. They're in a bear market. But it's also, of course, in politics where we're seeing trust crumbling. And it's also, for example, in science. We crunched the numbers on that and read quite a lot of research. So it is really fundamental beliefs that are questioned at the moment. So if you have a look at the numbers and the popularity of stuff like the flat earth theory, which is, from my point of view, complete nonsense. But this shows that people lose trust in established systems and established beliefs. So from my point of view, at the moment, trust in the US economy, in the, let's say, debt-driven policy of Donald Trump, in the US dollar, and in the Federal Reserve and central banking itself, is still pretty high, but it is starting to crumble at the moment. And this is the perfect case for gold going forward.
Okay. Yeah, because when it comes to international monetary policy, do you think we have less trust in the US dollar centric system today than, say, 10 years ago?
Well, that's a very good question. I think, for a longer term, it is important to talk about the de-dollarization, and I think we're gonna talk about this a bit later on, because it's such an important long-term driver for gold. But for the shorter term, I think the trust in the US dollar is also crumbling, because the main reasons why gold was breaking out recently, the first catalyst, of course, was that Jay Powell indicated that the Fed will be less patient on lowering rates. So he opened the doors to rate cuts in July. And the Fed noted that US growth clearly moderated. From my point of view, the US might already be in a pre-recession phase. So, of course, this is a kind of a toxic combination, because we've got US elections next year, and Donald Trump probably wants to avoid recession and also a crash in US equities, because that wouldn't actually increase his odds of winning the elections. but it seems that the cycle is clearly turning down, and it's not only in the US, it is in actually 95% of all countries where economic numbers are coming in weaker than 1 year ago. So it's really a globalized slowdown. Just have a look at the numbers coming out of South Korea, which is an important exporter, of course, which is a very, very good gauge for the global economy. Just have a look at European data, especially from Germany, but also from France. It's clearly weakening. And the second catalyst for gold recently has been the weak US dollar. So the rhetoric of Donald Trump has been kind of shifting from the trade war to a potential currency war. GaveCal made a brilliant analysis, and they said basically in late spring 2018, Trump started the first trade war when he mentioned that he wants to reorganize global trade. During that time, the US dollar rallied sharply. We've seen US equities outperforming. The Fed sounded kind of hawkish, and gold tanked while emerging markets were imploding. Now, starting basically on the 5th of May, Trump started the second trade war, of course, via Twitter. And it looks less like a trade war, actually, but more like a full-blown Cold War. And since that, actually, we have witnessed the Fed sounding a lot more dovish. Yields were falling back to 2%. The US dollar is rolling over, and gold was breaking out to the upside while emerging markets were doing rather well. So the strong US dollar has always been the linchpin of the deflationary mindset. And from my point of view, it seems that we have seen the peak of the whole deflation scare, and that now it still is very early, but I think that inflation, rising inflation, will be a main driver of gold going forward. And I think that the fact that the dollar breaking down and gold breaking up on the upside, this is a clear confirmation for that thesis.
There was also a chart in the introduction of the report that showed the declining trust in governments. And without looking at that chart, I do feel the world is becoming increasingly polarized, and people are getting upset with governments. People are getting upset with certain religious groups. People are getting upset with political systems. What do you think is the cause for this content? Is it really this guy here?
No, I think it would be naive to think that everything is about Donald Trump. I mean, I think we're seeing developments already for quite a while that laid the foundation for populists on the very right side of the spectrum and on the very left side of the spectrum winning elections all over the world. It is not only a US phenomenon.
Okay.
But of course, I mean, the spreading polarization of society is, it culminates in personal contempt and even violent acts. So we are quoting some surveys showing that Americans are politically more polarized than they have ever been since the Civil War. So since the election of Donald Trump as president, 1 in 6 US citizens no longer talks to a close relative or one's close friend if they belong to the other political camp. And this is frightening. I think that the fact that people are nowadays only discussing and arguing over social media and not really feel kind of in the situation and willing to sit together and have a decent political discussion. That's something that is definitely a very negative development, and we're seeing the same social polarization in Europe as well. And those right-wing and left-wing populist governments, for example, in Italy, we're seeing the Yellow Vest protests in France, we're seeing the Reich Citizen movement in Germany. Those are clear indications for that. We are seeing this whole Friday for Future movement which basically accuses politicians of failing to live up to their responsibilities. So those are really trends that we're observing all over the globe. And from my point of view, we like to dig a bit deeper. And from my point of view, the Cantillon effect is a major driver of those developments. On page 328 of the report, we've got a brilliant chart showing the income share of the top 1%. And you can see that since 1971, that number rose from 10% to now 20%. So this gap between the haves and the have-nots is growing and growing. And of course, asset price inflation. This is basically the main consequence of all the quantitative easing measures that were taken in the last 10 years. So this asset price inflation, of course, massively increases the gap between haves and have-nots. And therefore, I think that going forward, if we remind ourselves of the Occupy Wall Street movement, that was fairly small and peaceful. But I think the next protests like those will be definitely bigger, much bigger, and more violent. And therefore, I think that the next round of stimulus that will be injected will be much more fiscal and much more direct stimulus measures than quantitative easing.
Okay, I'm a bit curious here now. We talked about QE, we talked about inflation, we talked about de-dollarization. And I'm a bit curious because it seems like on one half of the Atlantic, the U.S., we're looking at possible QE, money printing more dollars. On the other half of the Atlantic, Europe, we're looking at countries that are de-dollarizing, potentially sending dollars back home. So dollars going back home, but the home base is printing more dollars. Are we looking at inflation or possibly hyperinflation? I mean, are we on the precipice of the next global financial crisis?
Well, I mean, you've probably seen it. There is, I think, 12 trillion in bonds now trading with negative yields. And this clearly shows that, the biggest pain trade for those bonds is rising inflation. Now, at the moment, nobody is really concerned about rising inflation, but actually, this is the one thing that central bankers want to achieve. Central bankers are concerned because inflation numbers are coming in way too low, at least for their framework and their models. So this might be the reason why they will probably introduce new measures like, I don't know, perhaps they will raise the inflation targets at least temporarily to 4 or 5%. We've seen many recommendations in that direction already. Perhaps there will be new rounds of quantitative easing. We're seeing more and more people believing that MMT, somebody just tweeted out, it stands for Mugabe Maduro theory, or modern, or not modern monetary theory, but magical money tree theory. So it seems that those ideas we would have said a couple of years ago that is just crazy, they are gaining in popularity. And of course, we always said that the next measures will have to be much more extreme. And it might be anecdotal evidence, but we're showing in the report, for example, the cover by Bloomberg Business Week, and they are on the cover of their, I think, April issue, they had the death of inflation. And it seems that nowadays really nobody is concerned at all about rising inflation. But if we remind ourselves of their August 1979 cover, where they said the death of equities, and the subtitle was how inflation is destroying the stock market, it appears that now the environment is completely the opposite. So from a contrarian point of view, I think rising inflation is definitely a good bet. And we all know that gold is a very, very good, efficient, and also very cheap inflation hedge.
Yeah, the report highlighted the topic of de-dollarization, and it's been highlighting that topic for a number of years now. But this chapter on de-dollarization continues to be an excellent read. It highlighted several important events that showed that leaders of major economies are more and more vocal about reducing dependence on the dollar. Can you share with us from your research about the status of and motivations of countries developing alternatives to the SWIFT payment system, which the U.S. has a lot of influence over?
Well, I think that that Donald Trump, and I really don't want to talk about Trump all the time, but he's really actively using the US dollar as a weapon. So um, I think that the access to SWIFT is, of course, a major thing for every nation. It is like, for example, I talked to many companies from the crypto space about bank accounts for them, and many of them said a couple of years ago they tried to have a bank account, but then they got kicked out for no reasons, or they just couldn't get a bank account. And this can actually kill a company within just a couple of weeks. Yeah, if they cannot do any payments anymore, this is really really a big problem. And it's the same for countries, obviously. So the US built up quite a lot of pressure to exclude Iran from SWIFT. But on the other hand, it seems that there's now a bit more opposition coming from the European Union. So actually, the European Union tries to establish an alternative to the SWIFT system. German Foreign Minister Heiko Maas, he wrote in the Financial Times, for example, Europe should not allow the US to act over our heads and at our expense. For that reason, it is essential that we strengthen European autonomy by establishing payment channels that are independent of the US, creating a European monetary fund, and building up an independent SWIFT system. So it seems that there's really something going on behind the curtains. This is one part of the whole de-dollarization trend. I think another big part of this whole de-dollarization puzzle is, of course, that central banks aggressively are buying gold. Last year it was 650 tons, the highest number since 1971. This year it seems that it will be even higher. So we estimate around 750 tons. And this also shows that many central banks are losing trust in the US dollar, are losing trust in international alliances, because we are also seeing this repatriation trend. So countries are bringing back home their gold reserves. That's a really big trend. And on the other hand, it seems that many countries really want to actively diversify out of the dollars and hedge their US dollars, because it seems that Donald Trump really wants and needs a weaker dollar, a significantly weaker dollar. So I think in the context of the de-dollarization, there's really important things going on. And this topic is going mainstream now. When we started writing about the de-dollarization 5 years ago in Gold We Trust report, it was a very under-researched topic. Now we even had interviews with Bloomberg asking us about the de-dollarization trend. So it's really going mainstream at the moment.
How do Europeans view Iran? Are they a trading partner, or are they a danger to peace in the region?
Well, I think that for many countries, they've got very close ties to Iran, and it seems that Europe wants to act as a sort of a buffer and really wants to de-escalate the most recent developments, and of course Iran has huge potential, has a very interesting demographics, so it seems that it is definitely an important country, but also an important region for European countries. But the fact that the US is putting so much pressure on the European Union because they want to renegotiate the agreement, the nuclear agreement, that kind of shows that it's really behind the curtains. There's quite a lot going on, and therefore, Jean-Claude Juncker just said, he said the whole situation at the moment is indeed absurd.
Yeah.
Because Europe imports crude oil and gas worth around 300 billion euros annually. But 80 to 90% based on estimates by the European Commission of those imports are accounted for in US dollars. So actually Europe wants to trade Iranian oil and also gas in euro terms, and as we know from history, that is indeed something that the US government doesn't really appreciate. So I think this has lots of course, very political and very sensitive consequences. But it is absolutely clear that the whole de-dollarization development has picked up momentum big time recently.
Okay. But speaking of that a little, the U.S., they did go into that petrodollar deal back in, I believe, 74, almost 50 years ago. Is part of the reason why we're coming to so much disagreement right now, de-dollarization right now, is part of it because this 50-year-old deal was at a time when the U.S. was the biggest oil importer, Saudi OPEC the biggest oil exporter, but now there are new players on the market, and frankly speaking, that petrodollar deal needs to be somewhat reconfigured somehow. Is this part of the reason why the de-dollarization also is going on?
Yeah, I mean, it is. I mean, for decades, the whole petrodollar deal was hardly known to the public. It's pretty interesting that there was a we found that that article about a milestone pact in the New York Times on June 9th, 1974, where they basically explained the whole deal, but nobody at that time, or very few people, saw the significance for political environment, and especially for economics and finance of that deal. So at the moment, it seems that the whole petrodollar system is kind of crumbling, and I think it is no coincidence that the first trip from Donald Trump when he became president, the first trip abroad, went to Saudi Arabia. And I think it's no coincidence that there's so much pressure on Iran now, because of course Saudi Arabia is very active in making the case for a war against Iran. So it seems that, as we've said before, it is something that is really picking up momentum, but it would be naive to think that the whole de-dollarization will lead to, I don't know, the euro or the Chinese renminbi becoming the world reserve currency very soon. It is something, and there's a great book by Barry Eichengreen about reserve currencies and their history. This trend can go on for many decades. And our friend Rick Rule said the dollar is a big lie, but it's a very liquid lie. So we should not underestimate that the US still is by far the most liquid, the most deep market for US treasuries, that it's the most liquid currency, and that capital markets are just much more established and more sophisticated than, for example, in the Eurozone or in China. So it will take a while, but from my point of view, the next crisis will not be a banking crisis or a simple financial crisis. It might well be a monetary crisis of our currency system. And if you study history, in those reallocations, let's put it that way, of monetary agreements, it always made sense to hold gold. And we should not forget, the US still holds 8,000 tons of gold. The Eurozone holds more than 10,000 tons of gold. China is aggressively buying, having officially more than 2,000 tons of gold, but we calculated that within China there should be 80,000 tons of gold. Russia is buying like crazy. Other emerging markets like Turkey, for example, are buying. The IMF has more than 3,000 tons of gold. So the most important players, they already have large amounts of gold holdings. And at some point, they're probably going to use them and will probably revalue them.
Yeah, because I think if we look at the numbers, if you combine the Eurozone, Euro system with China, with Russia, with IMF, they have about double the amount of gold that the US has. But having said that, how does gold really factor into what we discussed so far for, I guess, the average person, average Joe, average man on the street? And what about silver?
Well, I think that over here in Europe, it is just normal to buy gold. You can actually buy gold in every normal bank. It's interesting if you go to a bank in London, for example, or in New York, or probably also in Singapore. They will kind of ridicule you if you enter the bank and say, I want to buy some Kruger Rands or Philharmonic coins or whatever. So over here, I think it's also in our monetary DNA that gold is an excellent hedge against financial repression, against currency reforms, against hyperinflation. And it seems that now also the emerging markets, where actually 70% of physical demand comes from. So this is really the love trade, the long-term case for gold, because of this enormous demand coming in from emerging markets, where gold plays a very important role culturally, but also in religion and so on. So this is definitely another long-term driver for gold. But over here, it seems that those people that kind of got gold and understood gold, especially after the JFC, they are constantly buying gold, they're accumulating it. But it seems that, new buyers aren't in the market yet. And from my point of view, we will see that generalists, or really the institutional investors, they will start buying very soon. They are actually buying now. We have seen quite recently the largest inflows into the ETFs, into the gold ETFs, since the Brexit. So there is already something happening. And we're also seeing that when it comes to technology, there's lots of really fascinating applications combining the oldest monetary technology, physical gold, with new technology, blockchain, cryptocurrencies, and so on. So we wrote about gold-backed stablecoins, for example, and I think there's really a lot going on in this sector. And I think this might be a long-term driver, especially to become appealing for the younger generation again, for millennials. This is something that the industry really has to take care of. The average gold buyer is probably male and I don't know, around 60 or 70. So this is something that we are very, very actively doing, making the case also to the younger generation that it makes sense to have and to buy gold. When it comes to silver, Patrick, I think that it's absolutely fascinating that the gold silver ratio is still rising, and we're above 90 at the moment. And normally, silver is a very, very good, let's say, sentiment indicator for gold. So on average, the leverage ratio silver to gold is like 3-to-1. So silver rises and falls 3 times faster than gold. And it seems that at the moment there is not yet really any institutional demand coming into the silver market. But of course, silver is a tiny market. Right. Silver is, when it comes to really the big money coming into the mining stocks, but also the physical market, the ETF market, whatever, it is tiny compared to gold. So from my point of view, if my assumption is right that we're at the very early stage of a new bull market, I think silver is actually it's a bargain. It's got a tremendous risk reward profile, so it definitely makes sense to consider buying silver at those levels. But of course, we need some trend strength in gold. I think that silver will not outperform gold on the upside if gold just goes sideways or goes down. So once gold is really in an established uptrend, silver will massively outperform.
Okay, last question. That the inflation that we spoke of, you think we're going to see it, and is it going to get out of control, and by what time frame, what would we be looking at if it ever did get out of control?
Nobody is expecting rising inflation. Murray Rothbard, one of the icons of Austrian economics, he said that basically we are seeing three trends in inflation. The first one, or 3 stages. The first stage always is central bank induced inflation. We have seen that big time. Central banks created 18 trillion US dollars out of thin air. The next stage is asset price inflation. We're seeing that we're in the middle of the everything bubble. So it's not only equities, US equities, that are trading close to all-time highs. It's also the bond market. It's the real estate market all over the world. It's the art market. So we're seeing massive asset price inflation. And then, according to Rothbard, the third stage is price inflation. Exactly what central bankers and what politicians want to achieve. So from my point of view, it is not far-fetched to say, okay, that rising inflation will become a concern. And now with very, let's say, creative ideas like MMT, helicopter money, and so on, those measures, they sound extremely sophisticated. I mean, MMT, modern monetary theory. I mean, that sounds like quantitative easing or LTRO for the Eurozone. Very sophisticated. Nobody has a clue what it's going to be about. But I think that MMT and especially fiscal stimulus will have much more direct consequences and faster consequences for inflation. And once the genie is out of the bottle, we'll see how it's gonna turn out. I would not rule out definitely that inflation might get out of control. At the moment, we're still far away from that. But going forward, I mean, we should not forget that we're seeing the largest central banks experiments that we ever saw, especially on a global scale. So I think it would be naive to think that the outcomes and the consequences won't be dramatic and bigger than we've ever seen them in history.
Okay. Ronald Stoeferle.
That was perfect, Patrick.
Right. Can you let our listeners know more about the In Gold We Trust report? Fantastic report, by the way.
Thank you very much. Well, we are publishing this report for 13 years now. I started writing the report when I still worked for Erste Bank. Now we're publishing it under our own company, which is called Incrementum, based in Liechtenstein. The last edition of the In Gold We Trust report had more than 340 pages, so it's quite a brick. And even our compact version has roughly 100 pages. But I think it's really important to make the holistic case for gold. And therefore, I think we really care about our report. We invest quite a lot of capital, love, devotion, and time into the report. And I think that our readers really can feel that we care about this piece of research. And yeah, I mean, the download numbers are just staggering. We just published the Chinese version of the report for the very first time. So it is probably the most widely followed publication on gold. And this is a big motivation for us to further improve the report, to further make the solid and sober case for gold. We are not, let's say, radical gold fundamentalists saying that everything will go to hell, but I think that gold should be a part of every portfolio, and this is what we are basically describing it.
Okay, Ronald Stoeferle, we appreciate you coming on the show. It's been a pleasure speaking with you, and I know you got to get ready to get on a jet and have a vacation, so won't keep you any longer.
Thank you very much. Thanks for taking the time, and all the best to you and all the listeners listening to the show. Thank you very much.
Okay. Thank you also, Ronald. Appreciate it. That was Ronald Stoeferle from Incrementum AG and the author of In Gold We Trust report. For more of his insights on precious metals and the global economy, please visit his website, www.incrementum.li. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.